I'm delighted to be talking today with Joe Neri, the Chief Executive Officer of IFF, who are headquartered in Chicago, but very active across the Midwest. They are a CDFI and have been around for some considerable time. Joe, you will remember that we had a conversation in 2018, and this is revisiting some of the comments that you made then and reflecting on what's happened in the 3 years since. So welcome.
Thank you.
I'd like to start by asking you what may seem to be a pretty general question, which is that a lot has happened since we spoke 2.5 years ago. A global pandemic, the murder of George Floyd and others, a reckoning in America that systemic racism is a major challenge for our society. Further evidence supporting the urgency to resolve the climate crisis, which we've seen at least the US is back on the global stage again and an active member of that, and more. As you think about that, as you reflect on it, what has it meant for the community development industry as a whole, and in particular for IFF?
So thanks, Tim. That is a really big, broad question, and you said it that way, right? I'm probably struggling in a couple of those areas to really kind of come out with some clarity. Certainly in terms of the pandemic, climate change has been a challenge. I think most importantly in that list really is the murder of George Floyd and our industry's own reckoning with systematic racism and finance's role in it, and even community development's role in it. And I recently wrote a paper about this, but I think that, for IFF, we began this work 3.5 years ago when we started to plan for a new strategic plan. And a number of my staff stood up and said, we're not focusing enough on racial equity, and this is the challenge of our time. And we're not seeing it in our strategic plan, even our strategic planning process. And they were absolutely right. So for us, we began this journey a little bit early, and it's created a personal reckoning for me, who've spent I'm in year 36 in community development, my community development career, a reckoning that I wasn't personally doing enough in this space, and not being more antagonistic and more of an activist for racial equity in community development specifically, or even broadly. And that certainly speaks for IFF. Now, it doesn't mean that IFF wasn't doing multiple things to create equity, right? But it wasn't approaching it with deep interrogation that's really needed in order to dismantle the systematic part. And so when I think about that broad question, I will tell you we're very focused on one of those areas very specifically. And even though we've been doing that work longer, and certainly preceding George Floyd's murder, I also feel like we've just begun. And what I think we've learned, I think what many of my colleagues who come to me and talk to me, like, you guys started this early, is that we have just a ginormous amount of things that we don't know, and we had a lot of assumptions about what we thought was true that weren't. And unwinding that is a major challenge. And in the article that I wrote specifically, I asked the question, can CDFIs be anti-racist? And I said, I think that all of you are going to answer really quickly, yes, because we've intended to be all along. And I think that's exactly the challenge, right? Which is intent does not equal impact, and it doesn't equal success. And we happen to be in an industry that is very much a part of a lot of our tools are very much a part of systematic racism. And so dismantling it means that we're going to have to approach this different, both financial institutions wise and financial industry and community development. And that's the work that we've really begun. So to the extent of the broader question, I think that the other thing that's going to happen here is feeling a lot of pressure to act very quickly. There'll be a lot of money flowing. There's a lot of pressure. And yet, understanding fundamentally that these things will take time. So how do we make enough progress? How do we show enough progress so that we're thinking about how we wisely use those dollars? And yet at the same time, how do you build the long-term institution? How do you build the long-term processes and rigor to make real change versus the quick and the fast? So those are some of the things that are really on my mind in each of these areas. How do we come out of this pandemic with kind of building more sustainable infrastructure? How do we do that in racial equity? And I think it's utterly imperative because this is not a new idea in the community development space at all. And then how do we think about that in terms of the climate space, where we have the same thing, which is that we have to invest a lot for a long-term problem and benefit. And, humans aren't necessarily built that way.
So, Joe, that's really interesting because we've been on a similar journey within Next Street itself. And I think that what we found is that if you don't do the work internally, it's very, very hard to begin to address it directly in the work that you're doing outside of the so-called proverbial four walls of the organization itself. In IFF's case, I think of the fact that almost at the beginning, as I've heard you tell the story, and it still sticks with me to this day, is that the fact that you don't require appraisals was one example of removing a barrier to allow easier access to credit. So when you think about that, the two things. So one is the internal question. Well, what are you doing internally in terms of helping people to understand what anti-racism, being an anti-racist organization means, how people's behaviors have to change. And then the second piece is that, so much of the funding, as you're implying, comes from institutions within the white power structure. And, actually, if you think about it, the CDFIs themselves came out of the redlining and the desire to try and change that. So you're right, it's not new in terms of the attempt to address it. So what are you doing and how do you see that emerging? So I'm thinking in particular on the latter question around credit box and the way that we approach credit in the industry in general.
Yeah, it's a great question, and it's one that we continue to talk about. So IFF made a commitment to a racial equity framework, as I mentioned, as a foundational piece of our strategic plan. And we funded 5 years. So we made a financial commitment to our own internal education, working with a consultant and training of our entire staff deeply in terms of anti-racist and anti-oppression to become an anti-racist organization. And what that meant, of course, is, organizations start with their people, and you're only going to be as good as your people. And, like we're a CDF, a community development financial organization, people come to work at IFF with that vision, right? And yet a lot of, myself included, right? I frequently say I lived in this kind of progressive, colorblind, race neutral bubble and needed to really dig into why that viewpoint was certainly not going to achieve the goals that I intend. And we've got to do that across our entire staff. And I say this to every single organization that talks about, let's create a collaboration and go march on such and such. And I'm like, we're not marching with anybody. We're working on ourselves first. And we're actually not going to march with anyone that's not dedicated to working on themselves first. So we had made a commitment. Now, COVID has messed up a lot of things. That's an understatement. But we had made a dedication that every single one of our employees would go through a 2.5 day deep anti-racist, anti-oppression training that really kind of starts to look at systems, institutions, and so forth to move this beyond kind of personal prejudices to understand systematic racism. And only then can you start to have the conversations that you're talking about, which gets to, so what is it in our lending, in our real estate development, in the programs that we design, in the interactions that we have ourselves? What are those layers? So you talked a little bit about IFF has never used appraisals to determine our value. That's been 34 years that we've been in existence. It wasn't developed in terms of with a anti-racist lens. It certainly has been a fundamental tool on that end. But we didn't start that way. But there were a number of decisions that IFF made in its early days around making sure that capital could flow to communities, and certainly redlined communities of color that still need to be dismantled by a lot of CDFIs. So appraisals are one of them. I was talking this morning, no risk-based pricing at IFF. I mean, the very idea that we would charge those who we think might not pay us back more, and we certainly don't give them the money back if they are successful. And which, so I've defined that as just simply wealth extraction, because that's actually what it is. So a number of those things, we've always had low, quote unquote, down payment equity contributions because nonprofits didn't have it. But that's another part of this dismantling. The next step for us is our capital solutions group is actually going through all of the criterion to get a loan from us, even the quote unquote definitions of target market in terms of revenue size and audits and so forth, and interrogating each one of those with this idea of, do we need this to predict success? If we do, can we mitigate it so that it's less inequitable or it contributes to reducing inequity? And if we can't, and I know that there's going to be a number of things that you can't, what can we then do to help agencies or raise up agencies to get to that bar? So if you think about lowering the bar in certain ways, which we did with appraisals, we're like, actually appraisals are not going to tell us about the success to pay a loan back. That's actually about us. We can protect ourselves in a different way. So we modified the policy. So you lower the bar. But in other instances, we may need capacity building programs and so forth to raise the organizations up. So we're definitely internally working on ourselves and then externally working on these types of ways that we project out. And we're learning lessons along the way. And then the final piece is we do have to interact externally with funders and investors. In this piece that I wrote, I talked about we cannot be asking for permission from our investors. And I will say I've been on a number of kind of racial equity calls, and the chat boxes are just replete with, what do the investors think? What do the investors think? What do the investors think? And I really want to challenge, CDFI colleagues to say, and remind them, right? CRA banks weren't the first people to invest in us. And, we were the radicals. We were saying that we could do things that they don't do, right? So it was the Sisters Religious that invested in us because they had that mission of change, right? I think in the same way here, we just have to lead. And I frequently say around no appraisals, right? We've been doing it for 34 years. Our charge-off rate equals any commercial bank. So our investors, I mean, that's just not, if we get a brand new investor, they may ask about that, but that's just not something they focus on. So track record does matter. But I also think that talking about how we do understand appraisers, but how do we adjust for that? And that's how we've set ourselves up. You know, investors don't take losses when there's some valuation issues, and therefore they don't care. And that's what makes us different as a CDFI. And I think that that's what we have to do to start dismantling the structures that are really limiting equity.
So Joe, that's a really interesting lead into the question about, you know, the flow of money, which is enormous, coming at the CDFIs at the moment, whether it's through, you know, the federal level programs, fed through the states, fed through the cities, and the CDFIs are being seen as a very important partner in that, in terms of deploying it, whether it's, you know, relatively, you know, but when we talked 3 years ago, you know, I think there was one corporate that had made any form of commitment, which was to a housing project in California, as I recall. And, you know, people were beginning to ask about it, but it hadn't become core. And really the pandemic has led to them, you know, rethinking about what they should do. So do you think that that's, you know, sustainable? And, you know, what are the implications for the industry and for you in particular, as you think about it in the work that you're doing?
Yeah, I mean, so we certainly believe that it can be sustainable. You know, like with anything, there's going to be, you know, the early adopters. And so a number of corporations that have stepped into this, like Starbucks, you know, of course, they were an early adopter, you know, 8-9 years ago with the recession. But there's going to be those, and then there's going to be the people that'll come along, and then there's going to be the fence sitters. But they're going to watch for success, and they're going to see how this flows, right? So some of this will be, well, are the conditions that are pushing them to do this, will those continue? And that's you know, there's a lot of questions. Do we continue to have the pressures to be anti-racist, or does that disappear? I'm going to do everything in my power to make sure that does not disappear. And I think there's a lot of people that are absolutely dedicated to making sure that that doesn't disappear. And it doesn't become just one more racial reckoning epoch that we record on the bedpost somewhere, because that we cannot allow to happen. So, and then the other part of this is, are we successful with the money that we get? And that's both from the government side and the corporate side. And this is where it gets a little bit tricky, I think, because I think that we're going to want to prove quickly that we are the right people. And part of that will be, we want to deploy very fast. And deploying very fast is a way of showing that there is a huge need and that we're the right people to do it. And you can't really argue with that, right? And yet, at the same time, both on the government money-wise, large amounts of money being deployed very fast isn't always necessarily great public policy. And part of what we're learning on our racial equity journey is that speed is one of the, the horsemen of the apocalypse. And that when we are driving and using speed as our indicator, as our metric for success, we tend to get to those most able to absorb, and most able to absorb is absolutely inequitable. And therefore, speed actually can, and I think there's plenty of examples, only accentuate inequity. So we have a lot of work to do long-term wise in order to work on capital absorption in the places that we need it the most. And I think so these things all come together to me. And this is why having a racial equity lens is so important for us, because if we start with that question first, we are going to be less likely to just grab a big chunk of money and try to move it fast, because it won't have the equity goals that we need. And I think every CDFI is should be, or already are, or should be asking that of themselves too. So we've been having a lot of discussions about how can we, if we're taking on money, how can we solve immediate problems, but also think about what's the long-term sustainable build that we're doing with that money. And that's going to be in childcare. I think there's a lot of opportunity for that, but in numbers of other areas, how do we also strengthen ourselves as an institution and our borrowers as institutions with this emergency money? But that said, that takes a lot of thoughtfulness. And so I always worry about rapidness. I used to not, but I have gotten a heck of a lot older, so I learned my lessons in my youth. And secondly, certainly as we really interrogate some of the challenges of inequity, we're seeing that speed is a real challenge. And it became very clear in PPP. And I think as a lot of groups look at some of the other things that they've done, they're going to see that same pattern. And that's why they've got to interrupt that.
Yeah, I think it's interesting you raised the point about PPP, because I think that we're going to see more analysis of that. And we're going to see that except perhaps for the last round, so the final round where the specific carve out was there, the residual for the CDFIs, that the inequity absolutely persisted. And we saw that firsthand in the work that we did in New York City, where I think we were the only organization working with another CDFI that actually had a fund that was specifically aimed at BIPOC businesses and women-owned businesses. And it was hard for exactly the reasons you said, that if you do it too quickly and the programs are not designed properly, it's hard to make it happen. But well, it kind of raises...
One of the things that we know from this, and this was IFF, what we realized is that we didn't have the relationships, we didn't have the mail lists, we didn't have the right databases, we didn't even have the right relationships with networks to get to those communities. And so it didn't matter that there's lots of money. The channels for doing that work weren't what we thought they were. And again, this is why this internal education of ourselves is so important, because it helps us understand it's always been a problem. We just didn't see it because money came and we quickly deployed. We just didn't see frequently, many did, but IFF, I will say IFF didn't always see that the lack of those relationships meant that we were not getting as much money out as in the same kind of equitable way, and that will not change on a dime. This gets back to my point about we need, even as we do more, we try to use this money flowing now in a faster way, we have to build the infrastructure for the future. So we, when we did the PPP program, we reached out to our funding partners in a different way. We didn't ask for money. We actually asked for their mail lists. We asked for our foundation partners to, even more important than money would be for their mail lists to the smallest and a much more broad way. And they realized that they didn't have the mail list that they should have. And so they're now thinking about how do they invest in changing their own relationship matrices so that they can be more equitable. And hopefully these ripple effects go from there. Because that I think is one of the challenges in the IP space was those relationships. And that's the essence of what we say structural racism. If you develop database that don't include those people, those organizations, or some of those communities, even while you feel very successful, it becomes a self-fulfilling prophecy. And then along comes emergency, which is the ultimate time crunch. And sometimes you get a big chunk of money that you have to do fast, and you do it in the same way, and the band plays on.
So you mentioned there are two things you mentioned. So let's deal with one first, which is technology and infrastructure. You said infrastructure, but I'm assuming that part of that is technology. So what are you doing around that, and how do you see the rest of the industry? Because really interesting, something that you said, that it's not just the CDFI industry that might have this issue around infrastructure. It's foundations, it's others who are funding you as well, where you should be working, hand in glove. It's hard to do it because they don't have the systems either. That's a really interesting point of view and perspective. So what are you doing about the technology side, the infrastructure investments at IFF itself?
So I see technology as one piece of infrastructure, not all of infrastructure. And I know, various, the CDFI industry is very broad in terms of the customer bases that it has. My CDFI, focused on nonprofit organizations, isn't as technology dependent. And I don't mean that we don't have great technology. We do, and we've invested an enormous amount, thank God, because when we went to 115 home offices, that investment paid off brilliantly. But it's not a channel to clients or customers in the same way that it might be for micro lending, mortgage lending, and so forth. So we're not as focused on technology in quite that way. However, this year we have begun to start thinking about digital marketing in a different way to reach customers. But interestingly enough, not so much in our large metropolitan areas where we have placed people and offices so that they can be local, because part of our business development model is deep relationships with nonprofits, right? And so that happens in a more traditional way of being on the ground and understanding the community and so forth. But where we need digital marketing is to get to the corner-to-corner vision that we have to make sure that no nonprofit serving low-income communities anywhere in the Midwest cannot get capital for facilities. And that means an enormous amount of rural space. Midwest is the breadbasket, right? But a lot of small cities, because, rural is rural, right? But a lot of small cities where we're just not going to have an office. And how do we still make sure that they are hearing about us and that they can engage with us? And so we do see technology as something that can start to close that gap. So this year we've begun to do some digital marketing. But I also still think that, so infrastructure to me is also things like relationship networks. So it's a soft infrastructure, right? Relationship networks that can also help with marketing and business development. So one of the things that we have spent a chunk of time is CDFI friendly cities, which is this idea that creating a CDFI in every city of 50,000 people it's not sustainable, not smart, etc. But how do we make sure that we're interacting properly with those cities and making the connections, particularly as a large CDFI with dollars, to be able to invest in those communities? And so we've engaged deeply with the city of Bloomington on that front. Also now with the city of South Bend. And I believe there's some rumblings of starting that in Fort Wayne. So in Indiana, we may have a little bit of a competition between these smaller cities and who can do this, but but the idea that using that kind of marketing, business development, relationship infrastructure to then originate and make sure that capital flows is something that we're really paying a lot of attention to and want to grow that out. Another way that we've done that is to think about some of our small community foundation investors. So we create a relationship with the Rotary Charities of Traverse City, and they made an investment in IFF. Now, this is a micropolitan in Traverse City, Michigan. And they're like, but you got to lend this money here. And they're like, well, we're happy to lend this money there. You need to help us find all of the capital mismatches. And so they have been working very closely with us and have sourced a number of deals. So their $500,000 investment now has turned into, I think, almost $4 million or $2.8 million worth of loans and growing. And we have a number of other foundations now in Michigan who want to double click on that in that same way. And so we're almost now starting to think that even more important in the investment is just actually that network of business development mindset.
That's fantastic, because I remember you mentioning that 4 or 5 years ago, and that's outstanding that it's got to that place. So, Joe, just as we finish up here, I mean, one of the common themes is people at the end of the day, and the people in your own organization. So what are you doing to both attract, retain, and motivate the people that you've got? Because at the end of the day, the relationships that you just described are not built if you don't have people who are at the organization for some time. And I was actually taken when I was looking at the website that there's a lot of long tenured people who are in IFF, which is, you're clearly doing something right, or that wouldn't be the case.
Yeah, so starting with myself, right? I've been at IFF for 24 years. We just actually, last staff meeting, celebrated 2 10-year anniversaries, which was on top of 3 other 10-year anniversaries in the last number of months. So I think on that front, we're doing pretty well, but it's just not good enough. I mean, so first of all, we have an incredibly talented team, but we're adding 26 new people this year, and I will tell you that is a lot less than what's been requested just in terms of our growth. But I very much do not want to become a recruitment talent onboarding company that makes loans and does some real estate development. So, and we've had that situation a number of years ago, and it's kind of painful. So we did just invest and brought on board a recruiter specifically to work on this with our talent management group, and then of course senior management. Because it's not only just getting highly talented people, we need to make sure that we're getting highly talented, diverse people, because that makes us a better organization. It also makes us smarter around how to reach broadly across this diverse Midwest, and diversity in all of its ways. Because I've joked a lot that as we go into the next space where we're talking about small cities and rural, we don't have a lot of those people, and we've kind of become a little too big city. So it's a constant. I mean, it really is a constant challenge. But we're in the first steps of really beginning to create a full strategic program to think about that full time, and we've hired someone to literally be a person that is pushing that always, versus it being one of those things that everybody's responsible for. Of course, everybody's responsible for, but we really need that focus. I think finally, though, I was in an interview with someone recently who literally said, I care deeply about racial equity, and I can see it and feel it in your website, your majority of people, color and female board. the way that you're talking about these issues, the way your staff is talking about these issues, and that's what attracted me to really think about a position at IFF. And so we're working on trying to create the virtuous circle in that space that is necessary and part of any racial equity framework.
Joe, I really appreciate your time, and as we close out here, is there anything else that you would like to add?
I don't think so. I think I said this before, right? I've been really spending a lot of time thinking about, and part of it is just this weird circumstance where I was reading a story to a friend's child about the hare and the tortoise. And so this kind of, slow and steady wins the race is very much on my mind. And I was reading it, and of course I was laughing, but I also thought a little bit more about, I think that some of the takeaway of that story is it gets a little bit too focused on the ego of the hare. And if you see the cartoons about it, it's always just this egotistical hare that is just embarrassed that the tortoise is even in a race. But I think more about the pressures on CDFIs at this moment to do fabulous things. Because, you rightly said, right, there's a new attention on CDFIs from this administration and from corporations. And that is a fantastic thing. And it's something we've actually worked really hard at. But those pressures at the same time, I hope don't add to our own hubris as the hares, if you will, and make us move too fast without that kind of thoughtful, slow and steady. So I think that we really have to be super thoughtful about how we balance proving ourselves, but also building this long-term slow and steady. And, my colleagues in Impact 4, which are Reinvestment Fund, Capital Impact Partners, and the Low Income Investment Fund, we were meeting with administration officials, and we talked a little bit about the money. We thanked them enormously, but we also said that we need to build CDFIs into the pre-planning for some of these programs, because what we're learning on the ground, and each one of those organizations are in their own racial equity frameworks and doing the same kinds of work and asking the same kinds of questions at IFF, that having us up front can allow us to work and partner with your departments to think about how capital flows, but how capital flows into the communities that we want to get money into, which is one of the vexing challenges. And that takes time. That is where slow and steady is going to win the race. And we just have to make sure that at this moment that we are thoughtful about both of those challenges.
Joe, thank you very much. Really appreciate your time.
I really appreciate the opportunity, Tim. Thanks.